Matt Justice here for Tackle Trading. I got a recent question on how to place an order on the stock. We've done a lot in terms of the options and the currencies and whatnot, and we'll continue to do a lot of that as well. But let's just do something as a simple bracket order on the stock to make sure that everybody can kind of do this the appropriate way. Because before you, a lot of times, not every time, but a lot of times before you ever even get into trading other different types of tradable instruments, most people cut their teeth on trading stocks. So let's make sure we do this the appropriate way. Now, last night when I was in Master Trader, we found a whole bunch of stocks to potentially buy. Now, obviously, in looking at the market today, everything is a little down. But even as such, I still really like the utility sector. We found 5 or 6 stocks that are really good. See this on Edison, really good retracement right down into a support level. Didn't really get beat up today. Same thing with Southern, coming right down into a support level. So let's look at Edison, and let's also look at Southern here. And I want to place a trade on Southern. Both of them are very, very similar, so one's not really better than the other. Before we ever even make a trade, you really need to understand 3 things. You need to understand 1, your entry, 2, your target, and 3, your stop loss. And even if you decide to trade the option on Southern or Edison for that matter, you still need to know these 3 things. They're very simple things. Number 1, your entry price. You always want to buy as the stock goes up. You don't want to buy at market value. You don't want to buy if the market opens down, because right now the market is closed. So it doesn't open up until tomorrow morning. And so now we need to place an order to only get filled if the market responds the way we want it to respond. And so we're going to place an order just to control our entry price. So I'm going to take 10% of the ATR. The ATR stands for average true range. It is basically the statistical determination between the high to the low over the last 14 candlesticks. So it gives us an overall range of how far a stock will move on a daily basis. Well, this stock moves 77 cents a day. So 10% of that, we'll just round that up to 8 cents. I'm going to place an order 8 cents above the high, which is right there, 49.49. So 8 cents above the high is 49.57. That is going to be what we call a buy stop price. The second order to create the bracket is the limit. So the entry order is what we call a buy stop limit, and we're going to add another 8 cents to create the bracket. So we're going to create the limit order at 49.65. So we have an order called a buy stop limit at 49.57 by 49.65. Now we're going to place our stop loss. As you can see, there's a lot of different ways to place a stop loss. I'm just going to do a real simple one. Right here, you have a support level. It's right at the 20-day moving average. It's at the lows of the day. It's right around 48.80. That's about where our stop loss is. Well, 1/2 the ATR I'm going to put underneath the support level to put a stop loss. So just in case I'm wrong, I don't lose a lot of money. This is a swing trade for at the end of the day, and we don't want to take a lot of risk in there. So I'm going to place that stop loss right about 30, we'll call it 38 cents. 38 cents below 48.50, which we're going to put a stop loss at 48.42. So our entry order 49.57 by 49.65, our stop loss at 48.42. Now I'm going to put a target order, and I'm just going to do something as we call potential average yield. Potential average yield is the average cycle in a stock from a high to the low. As you can see, the average cycle here is about 1 month long. The average cycle here is right around 1 month long. There's a reason for that. Traders on Wall Street, hedge funds, everybody understands kind of the life cycle of something, whether it's short term or long term. And so once it hits into its life cycle, it'll start coming back down in price, as you can see right there. So this one goes from 43 up to 47.5. 43 to 47.5 is $4.50. This one here goes from 47 up to 51. Or excuse me, 46.5 up to 51. Once again, $4.50. There's a reason for that, life cycles. And so $4.50 if it is its average movement. We're going to call support right there at 49 just to make the math easy here. And so if it maintains its life cycle here, Southern should go from 49 up to 53.5, which means I am going to target 53.5. So my entry order is called a buy stop limit. It's at 49.57 by 49.65. My stop loss is called a sell stop. It is at 48.42, and my target order is called a sell limit order, and that is at 53.50. Now that we've prepped the trade, let's go ahead and log into Thinkorswim here, and let's right click on the chart, go down to buy custom OCO bracket order. Let's change our limit order into a buy stop limit, as you can see, right into that range, and let's just type it in. STP stands for stop, so it's 49.57. The limit price is 49.65. Our stop loss right there, once again, STP, is 48.42, and our target order, based on potential average yield, average cycles, is 53.5. Change my exit orders to good till canceled orders. Determine the amount of shares you're going to trade based on your position size rule, and confirm. Make sure the order is good, and send. And that is how you place a bracket order called a buy stop limit OCO bracket order. It allows us to place our entry, our stop loss, and our target all in the same order, and it makes our life a lot easier. Hope you enjoyed that. Matt Justice for Tackle Trading. Check us out at the website www.tackletrading.com.